The local bourse finished down as the afterglow from the Greek vote well and truly faded amid rising fear over Spain. I spoke to Marcus Padley from Patersons Securities a little earlier. Well, Marcus Padley, an abrupt end to that relief rally we enjoyed after the Greek election.
If you're in America, there wasn't a rally, actually. Wall Street's fallen ever since the election, although it did go up 6% in the few days beforehand, and the euro went up as well, so we sort of anticipated a little bit. But just a one-day rally here. The focus has immediately gone to Spain, where their 10-year bond yields have gone over 7% to a record 7.26%. You know, back to kicking the old worries down the street, really.
Well, so some company news, and I see Echo Entertainment looks very much in the sights now of Asian gaming group Genting.
Yes, Genting has upped their stake. I think if you take all the trades together, there have been some big trades. If they're all Genting, then they're up to almost 10% by the looks of it, which makes them and Packer with almost 20%, and they've obviously spoke last week, so they could be working together sort of thing. And if you take that they did a share issue at 3.30 when the share price was 4.50, and they had a profits warning, the share price should have been smacked, and its theoretical ex-rights price was 4.29, and they're 4.25. In other words, they've held up very well. People obviously think a bid is possible, if not likely, and it's one of the few stocks, I think, where that story may have some credence, so we wait developments.
Now, on the other hand, some of the hot air has gone out of the speculation and takeover targets of both Qantas and Perpetual. How do you read the play there?
Well, both of them down today. Both of them have been driven by press articles. Not to say there's anything wrong with that, but
certainly not.
Of course not. But the Qantas story in particular was about Macquarie having a defence team for Qantas when the share price hit a record low. The truth is Macquarie would be appointed to look after Qantas at any time. I don't think they would necessarily have a new defence team, and it looks like a bit of a beat-up of a story. And anyway, with a return on equity of 2%, you need to borrow $5 billion to buy it at 6%. It's not going to wash its face. So a lot of headlines, probably not a lot of grit to the story there.
Yeah, we had Mark Carnegie on our show denying that there was an imminent bid anyway, so I think that probably helped a bit, I'd like to think anyway. And amidst the Fairfax turmoil, I see that the share price of APN News and Media has plunged 7% today. What's the market telling us there?
Well, it's not a huge share price anyway, under $1, so a big fall today, yes, along with the Fairfax share price as well. I can only imagine it's a reflection of the value of printing assets. Interestingly, almost every broker at the moment has a target price on Fairfax around the current share price, and Deutsche Bank had a bit of research saying that they had the metropolitan newspapers valued at 0 in their 67-cent target price on Fairfax. So printing assets are not quite what they used to be.
A lot of takeover speculation at the moment. Marcus Padley, thank you very much for joining us.
My pleasure, Ticky.